It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast Weekend Property Show, where we unpack the Australian property market for you and the global forces continuing to shape it. Yes, another busy Saturday morning with market moves, investor trends and the bigger economic picture all on the table. And we're going to be discussing Adelaide in just a moment on our Saturday morning. It is June the 20th. Good luck if you're having a birthday today. Nicole Kidman, she is turning 59. Lionel Richie, Say You, Say Me fame, he is turning 77. And John Goodman is 74. Now, new market data shows that Adelaide remains one of Australia's strongest performing property markets despite everything that is currently going on in this cycle. Annual growth remains above most major capitals. Auction clearance rates even, they remain comparatively strong. And the Adelaide property market is slowing from exceptional growth to a more sustainable pace rather than entering a downturn. The apartment market is also outperforming houses in rental growth across several suburbs in Adelaide. As we take you there right now into SA to catch up with Peter Koulizos, and he is from the Adelaide University there. And a very good morning to you, Peter. Welcome on to the Real Estate Breakfast Property Show. First question, do you think that Adelaide still has another growth cycle ahead of it? Or are we now entering this period of consolidation after several years of extraordinary gains for Adelaide?
Good morning, Craig, and thank you for the opportunity firstly. Yeah, Adelaide has had extraordinary growth for the last almost 6 years, 5 3/4 years. We started in June 2020 and we finished in March this year when the war broke out in the Middle East and oil prices skyrocketed and another interest rate rise. But nevertheless, it's been a phenomenal growth cycle. I've never known Adelaide to perform this strong for this long. And we are now going into a period of consolidation. Yes, Adelaide has some excellent economic fundamentals, but in the end, people still need to be able to afford to buy property. And what you'll see now is price growth will slow. It won't go negative, but it won't be double digit anymore like it has been for the last few years. It will be single digit growth for the next at least 2, 3, 4 years.
Now, the latest realestate.com.au data, it shows that the median house price has reached over $1 million. That is up more than 12% over the last year. Units are also performing pretty strongly with annual growth of 12.6% and rental yields above that 5% level. It continues, doesn't it, to punch above its weight. Why is it doing that?
The real reason, in my opinion, is the lack of supply, not necessarily the lack of new houses coming on the market, but the lack of established houses for sale on the market. What I haven't been able to work out is why places like Adelaide and Brisbane and Perth have such a low supply of properties for sale on the market in comparison to, say, Melbourne, where unfortunately prices are dropping, where they have more than enough houses and units for sale.
Yeah, and buyers continue, don't they, to wait for the perfect time to enter the market. Is buying the right property in the right location, do you think, at the moment more important than trying to pick the exact bottom of a property cycle, which is almost impossible to do?
Exactly, Craig. I think buying the right property in the right location is the most important thing. Look, ideally we should have bought 6 years ago before COVID. Who knew that what property prices were going to do during and after COVID? And we can even go further back. We can go back before the previous boom cycle and before that. We're all geniuses in hindsight, but I think if you pick the right property in the right location and importantly hold on for the long to medium term, you will do very well in property.
Oh, yes. If you were thinking, gosh, let me get into the Adelaide property market as an investor, and you bought 2, 3, 4, 5 properties pre-COVID, what a windfall that would be. And of course, we've got those examples in the marketplace. What is it about, though, Adelaide's economic fundamentals like housing supply and population growth that continues to support prices when other markets are still slowing?
I'm going to try and be as apolitical as possible, so neither Labor nor Liberal, but the government we have in at the moment is spending a lot of money on infrastructure. Infrastructure creates jobs, and in my opinion, I think employment or the lack of unemployment is the single biggest factor that'll help a healthy economy and therefore a healthy property market. And often South Australia's come out top so far as the unemployment rate is concerned since COVID and after COVID. So in the end, I think there's a lot of job opportunities in Adelaide. And as I was saying to you before we came on air, Craig, I've lived in Adelaide most of my life. I have never known the job market so good in all of my time here. And it's been very heartening for the students that I teach at uni, because for a lot of the time, they do their property degree and they'd really struggle to get a job. Whereas now I've got employers coming to me before they finish their degrees saying, look, we're looking for some bright sparks to make a start in the property industry. So in one word, Craig, it's employment.
How long is that degree? Just tell us a little bit about what you're teaching there at Adelaide Uni.
I'm not sure if your listeners know, but our two big universities here in Adelaide have merged. So we used to be the University of Adelaide and the University of South Australia. Now we've merged to call it Adelaide University. And unfortunately, Craig, the Master of Property is not offered anymore. But I am teaching now in the Master of Urban and Regional Planning, which is focusing on property development. So it's not property in general that I'm teaching anymore. It's more focused on property development, which is a bit sad, but there you go. Change is the only constant in life, Craig.
All right, we're talking to Peter. He is on the ground there in Adelaide. We're back after this.
From the emotion of property, the economic inflation, managing your expectations, lack of stock, price growth, construction appetite, days on the market. Stay informed with us and know your property. You're listening to the Saturday Property Market Update.
All right, let's have a look at some of these median prices. And first we go in Adelaide to have a look at the median house price. As I mentioned, it's a tick over $1 million, $1,020,000. Annual growth, as mentioned, over 12%. The median rent is $690 per week. Rental yield on the houses at the moment in Adelaide, 3.2%. With the units, median unit prices, $605,000. Gee, go back to what Peter was saying before COVID. That looked very different. Annual growth, 12.6%. Median rent, $620 per week. Rental yield, 5.1%, and median days on market is 27 days. It is a Real Estate Saturday. If you are out and about today chasing property, good luck with that. Peter is with me. Yeah, always a busy day, I think, around Adelaide on a Saturday. People getting out, having a look at those properties. It's something that, the weekend, it just illuminates some of these areas, I suggest, in Adelaide for people looking to buy property.
Yes, certainly. People out at open inspections, people out at auctions. Saturday's certainly a very busy day here in Adelaide.
And investors, of course, they're out and about. The sentiment from investors, that has changed significantly following interest rate rises and the tax policy changes, which has got everybody talking. What are you currently seeing then around investors, especially with regard to Adelaide?
The market has slowed down in general, but certainly the investor market. They've been spooked by the announcement in the budget. They're not exactly sure what they should buy. Should they focus on brand new property because that's where all the tax deductions are, or should they stay focused on established houses because that's where the capital growth is? Firstly, to see what legislation is actually passed, because, there is a possibility that what was announced is not going to go through in full. And then once legislation is passed and we know what ground rules we're playing by, then you'll see investors come back into the market.
You know, politics in general, it's kind of done a 360 at the moment with everything that is going on. We've got Pauline Hanson as the most preferred Prime Minister. Who would have seen that coming at the start of the year? But yeah, that whole policy, not everything is guaranteed maybe to go through those policy points around housing.
No, that's right. There seems to be a lot of pushback. Maybe not so much for property investors, but certainly from small business owners about the capital gains tax ruling, certainly how trusts are treated. I mean, I know that there's 2 years before the next federal election, so the Labor Party has a long time to make things right if it does go through in full. I think if they're smart, they'll listen to the other stakeholders and do what's best for the whole country rather than just focus on the tax component. So the flip side of that coin is if you want more first home buyers in the market, naturally you are going to have less investors because that's what the government wants. That wants less competition. I think even when the market sorts itself out so far as investors are concerned, we will see less of them in the market, which is unfortunate for tenants because it's the private investor that provides rental properties. Even though property prices will slow, as I've said before, rents will not because there will be less rental property available for tenants to secure. It'll be very interesting to see how that plays out, but I just hope they get the balance right.
As you say, you know, the general election a couple of years away, Labor's got some time. You know, this is really it's a long-term play, isn't it? 20 years is being talked about before we really see the impacts of a lot of that policy.
Yeah, that's right. They are playing the long game. I mean, the current capital gains tax regime has been in for over 25 years, and it'll be interesting to see whatever changes come in, how that changes the property landscape for the next 20 to 25 years.
Yes, and with some cities slowing and others continuing to grow, where should, if we've got the investors thinking and listening to you right now this morning, where should investors be looking for the next wave of opportunities over the next 3 to 5 years? What do you reckon? What's your pick?
So if I take off my parochial South Australian hat, I would be going to Brisbane. And the main reason is because the Olympics will be held there in 2032. I've done a fair bit of academic research on what happens to property prices in Olympic cities ever since 2000 and Sydney. And generally what happens from the time the announcement is made to the time the games are held, property prices increase at a faster rate than average. After that's a different story. Things slow down. But certainly if people were looking to invest for the next few years, the short to medium term, so I would be buying in areas where there is new infrastructure planned, and not just say where the Athletes Village is going, but in particular new train stations and other new facilities and amenities that people want to be near when they're looking to buy a home to live in. I think there's some great opportunities in Brisbane in general, but in particular in close proximity to where the new infrastructure is going to be built.
All right, good stuff, Peter. We will leave it there, and thank you so much for those comments, those thoughts, those insights on the Real Estate Property Show for our Saturday morning. Enjoy your weekend coming up.
Thank you very much, Craig.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
We're talking about buildings that include wellness centres. They have infrared saunas. You don't just have a hot tub now, you've got to have a cold plunge pool, and all these things that are included in boutique apartments that we probably just didn't see even 10 years ago.
There is just this luxury expectation now. A lot of the developers are just listening to what people want. And I wouldn't mind betting that there has been a number of developers that have gone over to the UAE, especially into Dubai, looked at what those developers are doing and have brought it back to Australia.
Yeah, that's absolutely true. I have spoken with some developers and architectural groups who are using the Middle East and even Florida, interestingly, as examples for what they could bring down under. And one particular thing that we haven't seen a lot of in Australia may well do that other countries are doing is branded residences.
We connect you to the best real estate information across Australia. The Real Estate Podcast.